Hey everyone, welcome back. Today we're going to be diving into something super interesting, something I think a lot of us have heard about but maybe don't fully understand. We're talking about fintech. Specifically, we're going to try to figure out if it really lives up to its promise of helping those who need it most, microenterprises, especially those who don't have access to traditional banks. So to guide us on this deep dive, I came across this research article and it really caught my eye. It takes a close look at how fintech companies like, those financial technology apps we hear about all the time and traditional banks could actually work together. The goal: helping microenterprises in developing countries save more and really grow their businesses. It's exciting stuff. I mean, we're talking about potentially unlocking some serious economic power here. But, and this is a big but, I think it's important to ask, is fintech really the magic solution everyone's making it out to be? Is it really enough on its own? And that's what we're going to try to unpack today. Now, picture this. You're a talented tailor, right? You're in a bustling Indian marketplace creating incredible garments. But here's the catch. Just getting yourself to the closest bank branch, 2 hours. 2 hours. That's the reality for a lot of micro entrepreneurs.
And that, my friend, perfectly illustrates why we're even talking about fintech in the first place. It's about access. It's bigger than just having some flashy app. It's about breaking down those barriers.
Exactly. And that's where mobile money comes in. It's basically banking in your pocket. You can send money, receive payments, pay bills, all through your phone. No more crazy long trips, just simple, easy access to your finances.
And I think it's easy to forget how huge that is if you've always had access to these kinds of things. But for people who haven't, for the unbanked, it's transformative, truly.
Totally. And the cool thing about this research article is it goes beyond just the technology itself. It really digs into the actual obstacles these entrepreneurs face. They break it down into 3 main barriers: economic, cognitive, and social.
And maybe we should clarify what those mean a little, just so everyone's on the same page. Economic barriers, those are the most straightforward, I think. It often comes down to simply not having the financial resources, the money, to even get started.
Right, like you need money to make money, as they say, and then there's the whole cognitive side of things. And it's not necessarily about intelligence or anything like that. It's more about the mental load of running a business, juggling all these different things while also trying to manage your finances.
Absolutely. Imagine trying to plan for the long term, for your business's future when you're worried about where your next meal is coming from. It's tough. Those competing priorities can make saving feel impossible.
And then on top of that, you've got the social barriers. These are those often unspoken rules about money and trust, especially in communities where formal banking systems aren't the only way to handle things.
Right, like in some cultures, for example, loaning money to family, even if it puts your own financial stability at risk, is just expected. These social norms can be really difficult to navigate, even for traditional banks.
Okay, so we've got these really ingrained barriers, right? And along comes fintech with its fancy new apps and technology. And the research actually suggests that it can help, particularly when it comes to those economic and cognitive barriers.
Yeah, because if you think about it, mobile money, it makes transactions so much easier and cheaper, right? That means these micro-entrepreneurs, they get to keep more of their hard-earned income, and they don't have to dedicate as much time and energy to just managing their money.
So it's like mobile money is streamlining things, giving them some breathing room to actually focus on growing their business.
Exactly. And there's this great example from the research that really highlights this. During the pandemic, there was this Filipino pig farmer, and she was able to react so quickly to a sudden increase in demand because of mobile money. The speed and ease of those transactions, that's what allowed her to jump on that opportunity. That might not have happened with a traditional bank.
Wow. That's really inspiring, hearing how something like mobile money can make such a tangible difference. But it also kind of makes you wonder, if it's so transformative, why hasn't it solved everything? Why are we still seeing people struggle to save and grow their businesses?
Yeah, that's the million-dollar question, isn't it? And it's a key point this research really delves into. You see, mobile money, it's great for those day-to-day transactions, no doubt.
Yeah.
But it's not a magic bullet. It doesn't automatically fix all those other challenges like planning for the long term or those social barriers we talked about.
Right. So it's a powerful tool, but it's just one tool in the toolbox.
Exactly. You wouldn't expect a hammer to solve all your home improvement needs, right?
Yeah.
And that's where this idea of a hybrid approach comes in, combining the strengths of fintech with, the more established world of banks.
Okay, so not ditching the old for the new, but finding a way to make them work together.
Precisely. Because banks, they might seem a bit, old-fashioned in this age of instant everything, but they still carry a certain weight. a certain legitimacy.
I see what you mean. Like, it's that sense of officialness, right? Like, if you've got a bank account, you're legit.
Yes, it signals something to other people, to
Mm.
potential lenders, even to customers. It
Mhm.
can open doors that might otherwise stay closed.
And that reminds me of something from the research. They talk about this roadside eatery owner in India,
Hmm.
and they use both a bank account and Paytm, which is a popular mobile money platform over there.
Oh, that's a great example. It shows how a lot of these entrepreneurs, they get it, they understand the value of both.
So it's not about choosing one or the other. It's about finding the right mix.
Exactly. The bank account provides that foundation of stability, that legitimacy, while mobile money offers the flexibility to, you know, keep up with the times, serve a more tech-savvy customer base.
And that seems to be a recurring theme here, isn't it? It's not about replacing banks, but figuring out how they can coexist and complement each other.
Absolutely. And the data really supports this. This study found a much stronger link between using mobile money and consistently saving among those who also had bank accounts.
Wow, so it's like that traditional banking relationship. It somehow amplifies the benefits of mobile money. That's fascinating. Did the research look at all into whether this effect varies across different demographics?
They did, and this is where it gets even more interesting. This multiplier effect, as you called it. It was especially pronounced for women, particularly women facing poverty.
No, that's something to think about. Why do you think that is?
Well, remember all those barriers we talked about earlier? Women often face those hurdles in a much more complex way. They're juggling family responsibilities, navigating social expectations, all while facing financial constraints. So for them, having that financial flexibility alongside that sense of legitimacy, that can be a game changer.
It's like this whole idea of financial inclusion. It's not just some abstract concept, right? It's about real people, real lives being impacted. And I think this is important to acknowledge, this research isn't like the be all and end all, right? There are always limitations.
Right, we can't get ahead of ourselves. It's crucial to remember this was an observational study. They found some really compelling correlations in the data,
Yeah.
but it's not the same as, a controlled experiment.
So it's like saying, hey, everyone I know who eats a lot of broccoli runs marathons, so broccoli must be the key to running marathons.
Yeah, kind of like the correlation doesn't equal causation, as they say.
Exactly. So we can't definitively say that using both banks and mobile money is the sole reason for increased savings. There could be other things influencing those outcomes.
Absolutely. But even with those limitations, this research still provides some pretty strong evidence that maybe, just maybe, some of our assumptions need a rethink.
Like the whole assumption that fintech was going to completely replace traditional banks.
Exactly. This research suggests it's not that simple, especially when we're talking about empowering those who've been excluded from these traditional systems for so long.
It's more nuanced than just saying it's one or the other.
Right, it's not fintech or our banks, it's fintech A&D banks.
And figuring out how to make them work together in a way that actually benefits everyone, especially those who are most vulnerable.
Now you're getting it. It's about building a financial system, an ecosystem, where everyone has the tools they need to succeed.
And that brings us to why this research is so important. It's not just about the numbers and the data, it's about the bigger implications. If they're right, this has huge ramifications for how we approach financial inclusion moving forward.
Huge. This is a signal to policymakers, to organizations working in this space, that it's time to move beyond just expanding access to technology. It's about understanding the people we're trying to serve, designing solutions that are truly inclusive and effective.
So it's not enough to just hand someone a smartphone and say, all right, go forth and prosper.
Exactly. It's about building trust in those formal financial institutions, providing financial education and literacy programs, creating policies that actually encourage collaboration between these different players.
Wow, we've covered a lot of ground today, haven't we? We explored the potential of fintech, we debunked some myths, we dug into the power of this whole hybrid approach. But maybe more importantly, I think we've highlighted just how much potential there is to create a financial system that works for everyone.
I wholeheartedly agree. And it all starts with recognizing that there's no one-size-fits-all solution. It takes a multifaceted approach, one that blends technology with smart policies and a genuine understanding of the communities we're trying to reach.
This has been a fantastic conversation. Thank you so much for joining me on this deep dive into the world of fintech and financial inclusion. And as you go about your day, I want you to consider this. What role can you play in building a more inclusive financial world? That's all the time we have for today, but keep those questions coming and stay curious.